Good evening. Welcome to today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. Got some bad news for you today. The bad news is that the IRS is waking up. They've been on a hiatus. They haven't been coming after people, but they're going to start coming after people very soon, and you might be one of those people. So that's what we're going to talk about, IRS levies and the form LT11. Let's get started with the show. Uh-oh. There we go. Back to the show. I'm your host. I'm attorney Stephen Leahy, and again, we're going to talk about IRS levies are back. There's a good article today. There's a lot of good stuff about the IRS. They're starting to talk about increasing the by a dramatic amount, not a little bit, but a lot. We can talk a little bit about that, about their budget. There's those that are complaining about the budget. They've been complaining about it for 4 or 5 years since the last time when they had the scandal and the Congress had taken some action and limited some of their budget and then try to direct the budget to what was important, what the Congress thought was important. I think my own opinion is the IRS is kind of out of control. They've been out of control. Their budget is $13 billion a year, so it's not a small amount of money. And there are those out there that'll tell you that it's too small, that hasn't grown enough, and there's reasons for that why I disagree with that. But maybe we'll talk a little bit about that too. But first, again, let's talk a little bit about this article. We'll pull this here. Okay, so here's the article I was talking about. It's the IRS collection is back. Now sending intent to levy notices. Now a couple of years ago, the IRS started changing the format of their forms. It used to be very clear what was the most important form and which was the least important form. And in my view, what they've kind of switched them. And those that are not that important, for instance, now let me tell you on the form itself, when you get a form from the IRS, if you look up in the top right-hand corner, you'll see a code, CP504, CP503, or LT11, for instance. And these where you understand what form the IRS uses. They have a process in which they send out these notices. And by law, they have to send out so many notices before they can start taking anything away from you. And the final notice that they send you, and a lot of them will say final notice, even though they're not really the final notices. And as I was saying, I think that the early ones that are not the final notices, the IRS has made them look very onerous or very intimidating. Hey, this is big. We're going to start taking things away from you. You better act. And now, again, I think you should act sooner rather than later anyway. You don't always want to wait for the final notice. And again, a lot of them will say final notice, but we're looking for the LT11 final notice of intent to levy. From April of last year, some of these are on automated. They do this automatically, so nobody has to hit any buttons or anything. It just happens automatically. Well, they put that on hold last April. Right. So last April, the IRS says, well, we're not going to take anything away from anybody else. And if you're in an installment agreement, and we'll take they've come up with some initiatives, and we're going to talk a little bit about that too. I have an article about that also, written by the commissioner of the small business department. And so we'll talk a little bit about that too. But let's look into this article here. The IRS collection is back. The IRS switched its lenient position during COVID-19 and is now starting to send out millions of final notice of intent to levy, LT11. Be prepared to take action to protect your bank accounts, wages, and other assets from the IRS, because that's what this is all about. right? The levy is when the IRS takes things away from you, right? Either they go after your wages and they garnish your wages, or they go after your bank account and you go there and there's no money in the bank account. They could take anything away from you. Many creditors here in Illinois are prohibited from going after your retirement, but the IRS is not prohibited for that. They could take your retirement account. Basically, usually what they're going to go for first is your bank accounts, right? And so they're going to freeze your bank accounts. Now, what people don't understand is when they freeze your bank account, they only get the money that's there that day. So if 2 days later more money goes into the bank account, the IRS doesn't get that. Unlike in a garnishment is a continuing levy. That means every time you get paid, the IRS takes the money. Every time you get paid. If you're a 1099 employee, that might mean that they're going to take all of the money that you have coming, right? So, and I've seen the IRS go and levy accounts. So I had a chiropractor, for instance, and much of his money came from like 12 or 13 different insurance companies. Well, the IRS levied all of the insurance companies. So every month when they were going to send out the money to my client, the IRS got it and not him. So it's devastating. It can be devastating. If you're already having financial problems and then the IRS freezes your bank accounts or goes after your clients, this can be very difficult. Or again, even goes after your wages. Now, they can take other things. They could take your car. They could take your house. They could take any of your assets. It's like a little bit more difficult for them to go after those assets than it is. They know where you work, right? Because your employer sends them a W-2 and sends them information about your employment there. A 1099, if you're a 1099 employee, they know who gives you the 1099s, right? Because they get them every year. So they go after whoever sends those 1099s out to you. So even if it's more than one company, they can target them and go after your wages that way. The first thing that generally the IRS does is liens. But a lien, and again, now know the difference between a lien and a levy. And a lien is just a notice that tells the world, hey, you owe the IRS some money. And the levy is the action taking things away from you. So know the difference. A levy occurs when the IRS collects your back taxes through seizing your real or personal property. Typically, levies are made on financial accounts held for you by others, such as a bank, a stockbroker, or an employer. Levies are placed on bank accounts, Social Security. Now, this is another thing. People think sometimes their Social Security is protected. And from all other creditors, it is protected, but not from the IRS. The IRS can, if you're getting a Social Security check and you owe the IRS money, there's a very good chance that the IRS is going to go after your Social Security and start taking the money from your Social Security. In addition to any properties, levy can attach to any future federal tax refunds or state income. Well, that goes without saying. Anytime you owe the IRS money, and they don't have to follow all of those procedures to keep that money from you because they're holding it, right? They have a possessory interest in that money, and it's rather than sending it to you, they just keep it, and they can go after your tax refunds. And this is a big. I get a lot of calls because even when you're in a installment agreement or some other agreement, if you get an offer and compromise, while they're considering the offer, they will take your state tax returns. After the offer, they won't. But if you're in currently not collectible or some sort of installment agreement, they will take your state income tax refund and your federal tax refund. So that's kind of part for the course. Levies are placed on bank accounts. Okay. In addition, properties, federal tax liability. About 45 days later from the receipt of the letter, if the taxpayer does not contact the IRS for a resolution, a levy will take place. Okay, so remember now, it's 45 days because you have this notice of intent to levy. Now let me pull this up because I have a copy here, so maybe I can show you what that is. There's a I think this is it. Here we could show you what that is. Okay, so this is the LT11. Now it's hard to see on the screen unless you blow it up here, but you see up here on the top right here, right up here on the top here, you'll see that the IRS. I'll go up here now. Oh, it's on there. But up here on the corner, you'll see that there's LT11. That's what it's the LT11 intent to seize your property. This tells you, and this is the final notice of intent to levy, and it gives you 30 days to file an appeal, right? And this is the most important thing. This is when you have to act, because all those others, and this, I think that's why they kind of changed the look of them. The early ones are kind of menacing, and it makes, hey, you got to take these actions, and then if you don't, you're like, well, hey, they keep sending me these notices and nothing ever happens, and then they send you this less menacing agreement. I think it looks less menacing than it used to, because it used to have big type on it, notice of intent to levy, final notice. But they don't do that anymore. Now, again, here's a copy of it. It looks less menacing than some of the earlier ones. And so I think what the IRS is trying to get people to do is say, you sent me all those menacing looking ones, and now here's the thing: a lot of people don't even open the mail, so they don't know menacing from another. They don't open the mail at all. But if you notice that this one's not, and you had got all these notices and nothing ever happened, and so you say, nothing's going to happen on this one. Okay, so this one you have 30 days to file an appeal, and this is really where the rubber meets the road. And this is what we do for people. This is because what happens is you get it out of the automated system collections, or you can get it away from a revenue officer. So oftentimes I have clients who are they're being pressured by an IRS revenue officer to come up with an agreement, and the IRS revenue officer keeps taking things away from them and pressuring them to agree to things that they can't agree to, and because they don't have the money, and if they agree to what the IRS wants, they'll never be able to pay their bills. And what happens is when you file the appeal, they take it away from that revenue officer and it goes to the appeals office. And sometimes you can get better results in the appeals office than you can with the revenue officer. Not always, but sometimes. And sometimes it makes sense to try to get it away from the revenue officer and into this appeal process. And so this is the opportunity to do that. Yeah. Now I wanted to kind of review also. Now, because again, it's important that these levies, that when they start coming after you, because if you're getting a levy, right, you've already received a bunch of mail from the IRS. They're already coming after you. Most people that hire me, it's not 1 year that they're worried about. It's more than 1 year. And so you'll get a series of these letters over and over. And if you're married, both of you will get if you file jointly and you're married, both of you will be getting them. And so you'll get sometimes you'll go to the mail and you'll get a stack of IRS mail. And because every year they'll send you a different notice for every year that you owe for both of you. So if there's 4 years, that's 8 letters. It's kind of intimidating. You go out to the mailbox and you find 8 letters from the IRS. It can be intimidating. And, and so you want to take some action on that. But what I wanted to talk about here now is I'm going to go into this other agreement that this is the editorial I was talking about. Take the cuffs off the IRS. So there's many people now that are telling us that the IRS doesn't get enough money, and Elizabeth Warren wants to triple their budget. They're already going to hire 80,000 new employees at the IRS, and so what I like most about this, let me just kind of point this out in this article because I might not get to it. The IRS, here it is. Phone calls that go unanswered. Out of 100 million calls to the IRS in 2020, 75 million of those calls went unanswered. 75 million. 75% of all the calls. So if you get a letter from the IRS, it says call. You can't get through. You can't, they won't. They give you a deadline and you call every day. You can't get through. You won't be able to get through to talk to anybody. And so they're going to take action against you because they've told you to call. You have called, but you can't get through. And so that causes a lot of, they've done what they're supposed to do, and that's give you this notice, but you haven't been able to reach the IRS. And again, I think that's by design. The IRS generally, I think, wants to I always liken it to a bus route. So when the CTA here in Chicago is having a budget crisis and they want to cut their budget, the first thing they do is they cut the most used lines, right? So the bus that uses the money, maybe the 22 Clark Street bus or the 150 or all of these buses that are crowded all the time, they cut that one down. And then people get all excited and say, hey, you can't cut the CTA. We need those buses. I think that's what's going on with the IRS when they don't answer 75% of the calls. It's, this is a way for them to tell them, hey, we need more money, right? And then you support it. And you want to support the IRS getting more money. Well, this could be a problem, right? Because when the IRS gets more money, right, who are they going to come after? They're coming after. I know that we talked about this last week about them going after. They're going after the rich and the famous, but they're going after you. Okay, I think I'll get to this article tomorrow. We've already had some time here today, but I wanted to. I wanted to introduce you to this gentleman because if you're running your own business, Darren Goulet, he's from Louisiana. As he says, I'm from Louisiana originally, and I know this has been a difficult year in many states dealing with both COVID and natural disasters. In times like these, dealing with tax issues can be tough. Well, that's all true, but I wanted to show you this. They have some initiatives. The IRS is highlighting reasonable cause assistance. Now, reasonable cause means that they can forgive some of the penalties for reasonable cause. And this could be a very important part. Most people who hire me say, I don't mind paying them what I owe, but they are after me with all these penalties, and then they put interest on those penalties, and that really jacks up what you owe. And so many people say to me, if you could get rid of the penalties, I could make this happen. It's not that easy to do. They call it a reasonable cause, but look, in this initiative, they're making it easier to get a reasonable cause penalty abatement in order to save you some money because of COVID. For individual taxpayers receiving notices, letters about their tax bill, with tax liabilities up to $250,000. So that's a big number, right? No, most people don't have a yearly tax obligation of $250,000. For the tax year 2019 only, the IRS can offer one installment agreement opportunity with no lien filed. Well, that can be very important to people not to have the lien filed. Usually, if you owe more than $25,000, and then the IRS will file a lien against you. That's usually the first thing that they're going to do. If you owe less than $25,000 and you come up with a payment plan to pay them 100%, then you can avoid the lien. Now, liens aren't as damaging as they used to be in that liens aren't reported on your credit report anymore. So they used to have the whammy of not only, the IRS coming after you, but then it would hurt your credit score. And then every time, if you tried to get a loan to pay the IRS, you couldn't get a loan because your credit score went down. It doesn't affect your credit score any longer. It doesn't mean that liens are something that you want, right? The IRS is extending the short-term payment plan time frame from 180 days to normally 120 days. So if you owe the IRS at the end of the year, you can ask for this automatic extension, and they'll give you a little bit of time to pay your debt, to pay the bill. So now remember, if you're going to ask for an extension, the extension only pertains to the tax return. The taxes are due this year. They were due May 17th. So they were looking for the money May 17th. If you asked for an extension, they still wanted the money May 17th and then gave you time until October 15th to file the rest of of your tax return. So you can ask at the beginning, say, hey, I know I owe you some, whatever it is, and say, I could pay it over. Now they're going to give you half a year instead of 4 months. So that it's a benefit without too much of a penalty. They will hit you with the penalty though. The IRS is easing paperwork requirements to allow individuals more flexibility to get non-streamlined installment agreements up to $250,000 without financial verification. Well, this is huge in my mind, in my office, because this is the battle that we have with the IRS, is coming up with substantiation and we go after every case like we're going to court. So you need evidence, you need substantiation, and you have to, every line, every expense, every income, you need verification for. And so if they're going to ease up on some of that, that'll make it easier to get some agreements with the IRS. Now, I can tell you, if you're not paying the IRS 100%, if you come up with an agreement with the IRS, it's not over. They're still coming after you. Okay, so now they might agree to wait a year, 2 years, 3 years before they come after you. Remember, they have your tax returns. So anytime if you start making more money, they know you're making more money. And unless your agreement is to pay 100% of what you owe, and many of them are not, right? So these are what they call partial installment agreements. And if you have a partial installment agreement, then the IRS will come back after you in a year, 2 years, 3 years down the road to see if you can pay them more money. Now, so this is not going to stop that. The IRS extend guidance to automatically include new tax year balances accrued in existing installment agreements. So now this is another thing, right? Whenever you come up with an installment agreement, part of the agreement is that you're going to pay on time and you're going to file on time. And if you don't do that, they can cancel you. They could terminate your installment agreement. Well, if here they're agreeing just to take what you owe, and a lot of people say this to me, right? I know I'm already in an installment agreement. Can we just add it to that? And the IRS generally says, no, we're not going to add it to that. We're going to have to go through this whole process again and get more from you. And so this is a big, if they'll do this. I think a lot of these initiatives, they're great if you can get them, right? And so they hold them out. And here's the guy at the top saying, here, we're going to do this. But this is not always the way it works. And then the last one, the IRS will provide relief for taxpayers having difficulty meeting the terms of previously accepted offers. Well, that's not new, right? Whenever you come up with an agreement with the IRS and then there's a change in your circumstances, you can always go back and have the IRS change the agreement. You have to go through the whole process again, and they will, but you can get them to change the agreement. And I've done that for a lot of people. Now, I wanted to make sure that you understand this. If you're having tax problems, get a copy of my book, Deal with Your IRS Problem Today. It's free. Go to freeirsbook.com. That's freeirsbook.com. Get yourself a copy of the book. Again, don't cost nothing. There you'll find lots of great information in there about how to solve your IRS problem. So if I can help you anyway, please let me know. I want to help. If you have questions, be happy to answer those questions. If you don't, but again, get a copy of my book and then share, like, and subscribe. Share, like, and subscribe. Thanks so much for listening today, and I look forward to seeing you again tomorrow. Uh-oh. We did this. Media.